there may be some healthcare hurt ahead. For a few names, BMO downgraded UnitedHealth and Humana today, citing uncertainty over the 2020 election. Joining us is the man who wrote that note, BMO's Matt Borsch. Welcome to the show, Matt. Great to have you with us.
Thank you. Great to be here.
So break down why you think this. I mean, it's really the fear of a Democrat, and specifically, is it Elizabeth Warren?
Well, it could be Elizabeth Warren. It could be Bernie Sanders.
Mm-hmm.
I mean, I don't think investors necessarily see a big difference there. And actually, we're not betting that we'll get something like Medicare for all. We don't think Medicare for all can get passed.
Okay.
This is about the investor concern that you go from having an administration that is about the friendliest you can get to for-profit managed care companies to an administration that would be a really tough regulator, tough on these companies, as I think, would certainly a Warren or other progressive candidate administration.
So let's be clear. You're not making a call on the election, but you're making a call on the volatility leading up to the election as perhaps people get more concerned when they see who the actual Democratic candidate will be.
Yes, and in particular last week with what happened with Ukraine and the opening of the impeachment inquiry, this is not a sector downgrade. What we're actually doing is reshuffling our ratings, looking for a more defensible position with the ratings that we have now. So we downgraded the higher valuation names, UnitedHealth and Humana, that have a concentration in Medicare Advantage. We think Medicare Advantage has a high beta to Trump. And we've emphasized the lower valuation names that are more tied to Obamacare. Mm-hmm. And, so that's the ACA exchanges and Medicaid.
So those are the more defensible businesses, as you say.
Yes, because I think that investors are going to expect, and I believe it will be the reality, that if we get a Democratic administration, the incremental stuff that they will turn to is strengthening the ACA exchanges, strengthening Medicaid. And so that's why those companies are more of a hedge.
I've seen other healthcare analysts track the spread between Warren and Biden. And when Warren pulls ahead, that's worse for the XLV, the ETF that tracks healthcare. So if Biden actually manages to remain in the front, and it looks like that lead is sort of getting narrower and narrower as time goes by, is that as much of a concern to you?
It's not as much.
It's not. Okay.
It's not as much. But I think it's still going to be the case that if Trump is defeated, the industry will have lost the best regulator they probably ever had. And, Biden is known as a moderate, but it's going to be anybody's guess what kind of people he's going to put in charge of CMS and other agencies that matter.
Okay. And last quick question. Is there one name in your coverage universe that you think investors are selling off indiscriminately that actually deserves to be held through the election?
I would highlight Centene.
Okay.
Centene, I think, is, it's trading at 8.5 times our 2020 EPS. That is really extraordinary if you look at the history of the valuation. That's a 50% discount to the broader market, despite an outlook for above, low teens EPS growth over the next several years, at least.
Okay. Matt, great stuff. Thank you very much.
Thank
Matt
you.
Borsch, BMO. Where do you go here in healthcare?
So I think that I equated to when Obama was president, you had Obamacare, everyone got ahead of it and sold the space. They oversold it. It was an overcorrection. I think all of these names are going to be buyable. Mm-hmm. The closer we get to the election, I don't think Trump is getting ousted. I think that he's not going to lose. So I think all these are going to be buys the closer we get.
Wasn't UNH your final trade the other day?
Yeah, and I think the market is already priced in an enormous amount of it. Matt makes a great point. And in fact, if we saw Senator Warren increase at least her standing, then I think people would start to do the math. But I think the market's already begun to do the math. And we've been doing the math on this show for this sector on political risk for the last 13 years. And to me, it's always been an opportunity to buy. Now, UNH on the eve of elections was a $140 stock. It traded to a high of about $280, and the multiple grew about 30%. I think where you've gotten it back to here around $220 and a multiple that's around 16 times is very attractive for this company.
Where else in healthcare do you think is defensible in light of political turmoil?
Well, depending on, and Steve, you're making a bold point. I like that you're doing that. But I tell you what, depending on if it's Biden or Warren, that really does shift this whole thing dramatically. I still am a big believer in some of the pharma names. But we all know, as you brought up earlier, you start to see those names go down as we start to see some of these poll numbers start to move to the other side. So I think in the end game, I think some of them have gotten way too cheap, Mel. So I think there are some big names in pharma that you can still own.
You know, Tim, 16 times trailing UNH, but it's 13 times forward numbers, which I know can change for UNH, but that's historically at the low end for them. Compared to Centene, expensive, but compared to themselves historically, very cheap. They report on the 15th. The levels we're trading at now, by the way, are exactly where we bottomed out in April. I'm more inclined. Exactly. I'm more inclined to
crave it.
He's not waving.
Than wave it.